Morning to you, Paulie. Eamon, Dwayne. Morning, morning. Shaky, good morning to you. Hope you're doing well. Your whole family, Paulie. That's awesome. I appreciate that. Hey, John, good morning. We got some things to talk about today. I've thought about a different way of going about this. We're going to get into it right now. Good morning, everybody. Good afternoon, good evening, wherever you are in the world. I hope you're doing well. I'm not a financial advisor. The information on this channel is provided for education, informational purposes only, without any express or implied warranty of any kind, including warranties of accuracy, completeness, or fitness for any particular purpose. Please read through this. I'm not a financial advisor. Everything is not financial advice. It is all for educational purposes only. Good. Hey, so I've got real sophisticated programs pulled up this morning. We've got Paint. We're going to get into the analysis, of course, as always. I got a comment on, and I've seen a few comments like this before about, being intelligent and not being able to figure things out, and being a hard worker and not being able to get this trading thing down. And I wanted to use this as an opportunity to talk about this because I think that is a really big misunderstanding, that just because you're super intelligent means that, trading will be easy for you and things like that. And if you go through and read a lot of books from people that have traded back 30s, 40s, and 50s, they had a very similar sentiment about how they felt like they were intelligent. And actually earlier, late 1990s, early 2000s, there's some people as well that, they felt like they're really smart, but they couldn't understand trading. And then come to find out, it was really just they were searching in the wrong area. You could be just good at pattern recognition and things like that, and know what you're looking for and be able to manage your emotions and expectations and do a lot better than somebody who thinks, well, I'm good at this and that, so I don't understand why I'm... Anyways. So this comment had said that... I've been looking for a video that puts everything simply. If this happens, then this happens. If I get a first red or a first green day, then this happens. 3 days template, this happens, and so forth. So in all of my videos, you see me put considerations, expectations, criteria for an entry, and things like that, because this is all not meant to be 1 + 1 = 2 every single time. That's not what trading is. And if that's your expectation, then you need to look for a more mechanical system that is profitable and you can work with. That'd be like botting or EMA crossover strategies and things like that, where every single time something happens, you would take action because that thing took place. This is more a discretionary style of trading, where we look for signals and we look for setups, those reoccurring setups, but then it's up to us as the trader to decide whether or not all of the details that are showing on the screen, I should be pressing that button. So what I'm going to do is I'm going to go through the different types of templates real quick. I've spent 5 minutes rambling, and hopefully we can recover some time. All right, so I'm going to draw little boxes. These boxes are going to be a day. So he wanted this plus this equals this, and I think I've been doing that for quite some time. And hopefully he's watching, the person that commented this, because I'm going to try and explain this the best that I can. These are the different types of templates, all right? So we've got 3 days of breakouts, 1, 2, and 3. And on that fourth day, looking for a reversal. Big takeaways with the 3 days of breakouts is going to be, did we get a lower low on the inside or a higher high depending on direction? And did the front side of the move, is that broken? All right, a little FS or front side. And then usually with these, you'll have trap volume at the high or at the low. Now with these, you can also have 3 days of breakouts that don't necessarily close in breakouts. So that would just be 3 days of longs triggered into the market where the market doesn't close outside of the previous day's range, but it did trigger one side of the market. So 1 + 1 = 2. It would be, I have those 3 days of breakouts, and I have that lower low or that higher high, and I have a front side of a move broken for the reversal setup. That's one of the templates that we're looking for. This is all relevant to today as well. That's why I'm doing this, because these are obviously the templates that we're going to be looking for. Template number 2, breakout pullback. Basically, day 1 of breakouts. The market was going down or going up for multiple days. And then this is the first day now where they've broken out of a previous day's level in the other direction. What do I want to look for over here? What are some of the considerations? When this happens, this is where you measure 3 levels of drop. You project this line across. You look for 3 levels of drop from previous day's high. So we're coming into the new day. And they do 3 levels of drop coming back down. Sometimes it won't be the full 3. Sometimes they just pull back to previous day's high or low, depending on direction again. But the idea is you measure from previous day's high down 3 levels of drop using the 100 pip box, and then you can find a strike zone, or you can just use this line, or you can just look at the low of the day. And then the same thing I'm going to look for, kind of similar to over here. On the day itself, I'm going to use a 5-minute chart, and I'm going to wait for a break in structure to the upside. That's my confirmation that my thesis could be correct. I'm going to wait for those 3 pushes back down into the low, and then I'm going to try and get it on the first pullback of this, or I'm going to get it on the peak formation, depending on how the day is set up. Okay. Template number 2. Template number 3, first red and first green day. You have a large pumping day. This could be in a down moving market, or this could be a reversal setup. So if the market was going down, you get a first green day. That would be a reversal setup. If the market was breaking out to the downside and you get a first red day, then that's kind of more of a trend trade. Anyway, so a large pumping day, or just a day that has brought the market from down low to up high. Obviously, first green day would be the opposite. A day that opens, trades up through previous day's high, and then closes as a first red day. This is going to be usually creating a lower low back down on the inside, kind of similar to everything else that we've already looked at. They make the lower low, new day opens up. This is where you draw your end of day consolidation and look for structure once again for the collapse back down towards this region. Or even where the pump began, could have been from down here. Depends on, again, the context of the market. This can also be an inside day where this is not broken. This is just an inside day that also turns into a first red day. So this would be like day 1, pump day, day 2, first red day. Could also be an inside day, day 3, looking for the trade. And sometimes day 3 will pump back up, and then day 4 will be the trade where it continues to go down. Again, context is important, and you just don't know what you don't know. 3-day rectangle, the next template that we're looking for. We have a couple different variations. You could have the outside day variation, where they spike both sides of the range, come in sideways, they spike up, they spike down. They could spike down first, and then on the next day, looking for parabolic moves either down or up. This would be a 3-day rectangle. This could be the first day over here where there was a sideways consolidation, and then you get your outside day, which would be day 2. And then on day 3, parabolic trend or reversal trades, depending on, again, context. The next variation of a 3-day rectangle could come from peak formation high on the first day, peak formation low on the second day, parabolic move on the third day, or maybe even the fourth. And I'll even put that up here if you all are taking pictures of this. Because sometimes these 3-day rectangles do not eventuate until the 4th day. Sometimes the first red, first green days don't eventuate until the 4th day. Sometimes the 3 days of breakouts don't eventuate until the 4th day. Sometimes breakout, sometimes it doesn't eventuate on that second day. So you would have like consolidation day 1, breakout day 1, but day 2, essentially, right, the second day. And then you're looking for the move on the 3rd day, breakout, pullback, 3 levels of drop. But then sometimes it'll just go into consolidation down here and not do anything. And you're like, oh, well, what's going to happen? I have no idea. But then on the next day, Now it's breakout, pullback, 3 levels of drop, gone into consolidation, made a higher high, and now it's ready for the squeeze. And you've missed it because you weren't paying attention to, or maybe you just didn't know that it could happen like that. So hopefully this has provided a little bit more of this, and that. Let's see, 3 levels of rise or fall. You can use 3 levels of, it's breakout day 1. You can use 3 levels of drop. 3 days of breakouts, big takeaways again, lower lows, higher highs, and the front side of the move being broken. First red days and first green days, big takeaways, end of day consolidation. You can measure 3 levels of rise if it's first red day. And also if there is no 3 levels of rise and they've already started to break down and break out, then just gauging the pullback and getting in on the trend continuation. 3-day rectangles, big takeaways, peak formation high, peak formation lows, looking for short squeeze, long squeeze, parabolic trends, parabolic channels, big squeeze-like patterns. There we go. And with any one of these templates that I have just gone over, if it's not doing what it's supposed to do at a certain time of day, then you don't have a trade, or I don't have a trade, and that's how I filter. For example, we just had a peak formation high, peak formation low, either, I think it might have been last week. It might have been this week. I can't remember. And I came to the screen and they were already at the previous day's high of that peak formation high and working. I didn't have a trade. There's no trade because they're already at the level that I would like to be taking this to. So I get the trade from the inside going back towards the outside. And I'm looking for the expansion of the range, but I don't necessarily want to get in at the level. Same thing with like first red day. I come to the screen and London has already capitulated down or back down to or through the level that was supposed to be my target. I probably don't have a trade anymore. And if I do have a trade and it just keeps going, then great, but I'm not going to risk it. Same thing with this. I've got 3 days of breakouts. This is supposed to be my first target, or any of these over here is supposed to be my target. And we've already hit it. At 9:30 opens up. I'm probably not going to take that trade. All right. Running my mouth. Hopefully this is helping somewhat. Hopefully one of these notes that I've talked about was useful to somebody in here. And hopefully the person that made that comment is watching right now. Let's go into the analysis for today. I'm looking for these templates for today. All right. So coming over to this week. Oh, I'm out of juice. All right, well, that's all right. Monday, opening range for the week. Every single week, that's the initial high and the low. That is Mondays. Then on Tuesday, we get a breakout day, giving us on Wednesday the ability to look for a trend continuation. That continuation happened in the gap time. So let's go over now to Wednesday, Thursday, Friday, and figure out the 3-day cycle and if there is a potential for a setup today. First thing that I notice is Wednesday attempted to go lower and failed. They pulled back up onto or into the inside of the current day's range at the low of the current week. If you're thinking, hey, that means it's day 1, you are correct. And that is of the 3-day cycle. The next thing that I'm noticing is on the next day, day 2 of the 3-day cycle, instead of expanding away from day 1 lows, we get an inside day. Okay, they did not trigger previous day's high or previous day's low. So I actually left that out of the paint templates. My bad. If I have an inside day, I have 2 options. We get a day that forms, and then on the second day, I'll project these levels across. We'll get an inside day. And then on the third day, I've only got 2 options. It's either going to be breakout, pullback, and trend, or it's going to be trigger one side of the range, pull back up, and then go back for the other side of the range. That's the only 2 trades that I have. Or I do nothing. That's it. So let's go back over here. Now, they've already triggered both sides of the range. It's Friday. So right now, it's going to be an outside day. What do I need to do? I might need to do nothing because they have already done at least one. they've triggered both sides. So maybe there's going to be an expansion either today or Monday of this range. I don't know. I know that today's day 3. Yesterday was an inside day. Are we still on the inside of previous? Nope. Previous week's high has been triggered. Previous week's low is down here. So what I'll do is I'm just going to wait till 9:30, especially this being an American index, and see where we're at. I think there's news today at 8:30 and at 10. All right. Let's go on to US 30. Where's my levels? I need those to pop up. It's not going to behave. Interesting. All right, let's go to oil. We'll come back to US 30. Let's see. There we go. Okay, so this week, oil, we restarted the cycle back here on Monday, day 1. Then we got a peak formation low on Tuesday, so they set the initial high and low of the week. Traded back up into the high on Wednesday. This was actually a really good trade. I think we talked about this in the last live stream as well. We're at the high of the week. So we're at a level that's important. Again, this is one of the playbook templates in my study binder. They trade back into the high of the week and make a lower low back down on the inside of the current week's range. And they go back for the money at the other side of the range. So lower low, pull back, and then vertical move. Now, I didn't take this because it was kind of choppy in here, and then the session ended, and I wasn't in, so I just let it go. Okay, so that would have been day 1 reset again, and then we get it again. Day 1 reset over here. So we got day 1. Today's day 2. We're expanding outside of the current high of the week. Okay, day 1, day 2. And it is day 3 of the week. Oh. And it seems to possibly be doing a bit of an expansion. Peak formation high, peak formation low, consolidation in the middle. It starts to go vertical. And this is a perfect example of when that happens. Because the consolidation is clean. You get a nice clean rectangle. And then once they start breaking out of that rectangle, start studying price action a lot more. Notice how the candles are dragging in one direction. They're not really hitting. There's no overlap. They're not triggering previous candles low by very much. That one got a little bit. And then it starts to pull again in the London session. So you can draw like a little channel here. And that's that parabolic channel that I'm referring to if you go down to a lower time frame. Timed well as well. You get your little pin hammer 330 breakout, pullback, continuation. Now, how does that help us for today? Do I have a setup for today? It's just broken out right now and it continues to go vertical. I might not have a trade. I will continue to watch to see if there's some kind of pump for a dump. And if that did happen, I would be looking to take it back down to the breakout level. But right now, this seems like it's a pretty strong breakout. So we will have to see. Or this is just a blow-off move. Could be a blow-off. Look for dump and pump and dump on US 30. It might be the same for oil. We'll see. Oh, this is consolidated. All right, so similar to the NASDAQ, we're on US 30 now. We've got the breakout at the low of the week that restarts the cycle. breakout day one was over here on Tuesday. That's where you, again, measure for 3 levels of rise. So you would measure from previous day's low using the 100 pip box, measure up 1 to 225, something like that. You can also just project, oh no. You can also just project these levels across, which I highly encourage people to do. There's your 3 peaks pattern. Gap time was the trade. Broke down, pulled back, 3 pushes, and there's a bit of continuation, trapping at the low. Anyways. So day 1. Then we get day 2 as an inside day. And the same exact thing that I said on NASDAQ. Based off of this, I can't say, hey, I'm looking for this or I'm looking for that. I need to wait for all of the news. And I need to wait for 9:30 to open to get the final picture of what's going to happen. But they have triggered previous day's low. Maybe that's a lower low for the dump. Did Shaky just say that? Yeah, so they could have just pumped it back up for the dump. They triggered previous day's low. Maybe that's the lower low for the continuation down. Or maybe this is just going to sit in this weird orb-like consolidation for the rest of the day. Who knows? That's really all I can say on this. I'm confused by measuring up. Okay, so, Kaiman. The market only does 3 things, right? Measuring is just a system or a way of gauging a strike zone or gauging where the pullback could go back to. But if the market breaks out of a previous day's low and it closes and then it starts to pump back up, well, it's going to go back for the money. It could. Or it could just, you can measure from this previous day's low. So let's say that the day ended here like this. It closed in breakout. I measure up 150, 3 levels of 50. Measure up 300, 3 levels of 100. And then that's just showing me areas where the market could fail. So it gets back up there. We arrive at the level and I say, hey, wow, that looks like a 3 peaks pattern or 3 pushes back up. And then there's a lower low and it seems to be failing at my 3 levels of rise. Okay, I can take this trade. And then I just, where the pump began, because it's a trend trade, so it should expand down through the low or at least get back to the low to retest. You can measure from previous days, yes, from previous days low. And on the day itself, a lot of times on the day itself, Kaiman, you will also be able to measure up from the low of the current day. A lot of times. Oh, beat me to it. Can you show me your indicators? Yep. One of them is the pips to profit indicator, and it's on Discord. It's free. Just go grab the link, and it's not a public indicator, so you have to add it to your favorites and then add it to your chart. And then this one is, so this was what it's called. And that's going to do your session boxes. You can do previous day's high and low on here. You could automatically input previous week, previous month, initial balance, all that stuff. Days of the week. You could put an EMA on there if you'd like. And your 100 pip box, which would look like this. So what did I say? 100 pips. So this, notice how this peak formation was made at double zeros, and then they went back up. So around 250 pips or so. 250 would put us at double zeros, which is where it failed. Is that indicator free? Yes. And then finally, the previous day's high and low indicator. I use a different one from the pips to profit because I'm weird about my lines. And that's just previous open, high, low, close by Nephew Sam, which is public. You can just go grab it. All right. All right. Let's go. I need to finish this off. Let's go to gold, which I think after looking at everything today, all of the indexes, gold and oil, as of right now, gold is kind of my favorite. So we had this peak formation made on Monday, opening range of the week. They triggered the other side of the range, and the breakout of Friday's low failed, creating day one of the cycle. All right, so this is, I'm going to put one, I'm referring to day one of the 3-day cycle, not of the week. Okay. Now, on the second day, they broke out and it failed to go higher, and the same thing over here. So they just keep resetting the cycle. So what is this doing? All this is doing is triggering in longs higher and higher and higher without going back to the other side of the range. All right, so this is the front side of the move. Has not been broken yet. So if you're thinking about, hey, that's 3 days of breakouts or 3 days of longs triggering into the market, what do I do next? What's the next part of the equation? Okay. There it is. 3 days of longs triggered into the market. Now, we have not broken the front side of the move. Now, does that mean that I can't get a trade off this? Well, we could come back down to at least retest this area. So how far away is that? Okay, well, that's pretty far. Good stuff. So let's go and take it a step further. I'm down on the 5-minute chart now. We've been making higher highs and higher lows. Have we pulled back and made a lower low? Okay, so we got a lower low. Now, could this lower low not be a lower low? You know, could this just be a pullback? 110% it certainly could be. And then I would just either get stopped out very quickly or not be able to take the trade or not take the trade at all. However, we've got the lower low and we've got step one, step two. Looking for it to continue. That would be my trade setup for this. Where would I target? I would try and get down to the breakout level. So going back into higher level longs. Project those levels across, go back for the money here, and then of course you've got these higher lows as well that you could go back for. But the big one would definitely be going back for the money down here. Put some little dollar signs down here. I saw some questions popping up. I'm coming back. Can you trade currency pairs with this method? Yes. If it's got a high and a low of the previous day, you can trade it. Market is a market. It all is a reflection of human behavior. I trade currencies, but I mainly trade futures, or I mainly trade indexes, gold and oil, commodities and things. I used to trade Forex primarily because of MetaTrader and stuff going away. I made the switch to futures, and honestly, it's just a lot easier to trade what I trade with futures, so that's why. Let's see here. All right, does anybody have any other pairs they want? I do have a list for those of you that do trade currencies. Sorry, I'm getting chopped up here. If you trade currencies, which pairs do you want to see? Let me know. I'll start off with probably a less likely to be asked. We'll go down to natural gas. Take a little glance at this one while y'all are typing out which pairs. Okay, Monday was the opening range, closed in breakout, so this could have been breakout day one. Then we get breakout day one again, back down to the downside, failing once again on Wednesday. So this is peak formation high on Monday, peak formation low made on Tuesday/Wednesday. And how am I getting that? I'll just project these like this. Notice how the breakout happens, it occurs, and then it fails the next day. And then we get a breakout back down, and it fails the next day. So the peak formation high is a combination of Monday, Tuesday. And we get a peak formation low, combination of Tuesday and Wednesday. And then now, bit of an inside day, it looks like on Wednesday, breakout day one. Hey, it's breakout day one. What do? Oh, I should probably measure down 3 levels of drop and see if I can find a trade in my session. And I should project this level across and see from that level, do I get a trade? So let's put up the 100 pip box. I don't know if it's going to work here with natural gas. It's not. 150 or so ticks would be right there. So there's your 3 levels of drop. They dropped it back down 1 bar, 2 bar, 3 bars, 3 levels, engulfment, Asian session. So the trade happened in Asia. That was the setup. CAD JPY. Go back up. I'm on an hourly chart right now. Okay, Monday was a breakout day. Opening range fairly wide. Tuesday failed. First red day. Then you get your inside day. Tuesday was day 1 of the cycle. Tuesday was day 2 of the cycle. Did not trend away from day 1. In fact, it just stayed in consolidation. And then Thursday was a breakout day back down to the downside. Breakout day 1 in the opposite direction for day 3. So what would I need to do? I would need to measure up 3 levels, project this level across, and see what pattern forms. Now, it's something to note. We are at the low of the week and things like that. It looks like we've already triggered both sides of the previous day's range. They've made some very large bars down into the low, big 1, 2, 3. Huge bar into the low, not going any further. So I might think about that as well. Day 1, day 2, day 3. Today is that is also day 3, considering it's Friday. How do I not get distracted by major red news candles? It's more of don't get distracted. It's more of telling the story. Because if, let's say that a major red news candle happened at 8:30, I try not to get caught up in looking for the continuation unless it's a strong pull. And even then, I probably still won't take the trade. But if there is a very large candle at 8:30, there's a potential for a pump for a dump. So I need to be aware of that. But other than that, it's just I treat it like any other candle. Did that candle take me back to a level? Let's see. Anyway, oh, that's what I was doing. I was trying to measure 3 levels here. So we got a peak formation made down here at, was that 50? So we have 3 levels would put us back up at 25. We're back up at 25, 3 levels of rise. We will see. NQ already done its expansion. Did it confirm? Amazing. Oh boy. Okay. So like seeing this, I would probably think, man, maybe today's not the oh. Well, would you look at that? Lower low on the inside and a break now of Yep. And sometimes, John, kind of going back to your question as well, sometimes the news candle is what confirms or even completes the entire trade, right? So this big candle down could have I'm not saying that it did. I'm just saying that this could have been the completion of the entire trade, and now I don't have anything anymore because they just kind of gave me the middle finger, if you understand, know what I mean. All right, any other pairs? CAD JPY, inside day, dummy short. Anything else? Seems like we got some newer people in here today, which is great. I like to see some new people showing up. It's good. Are you trading the open? I'm going to be looking at 9:30, and I'll be posting it up in Discord if I find anything. All right, ladies and gentlemen, fantastic stream. Great being with you all and kind of hanging out. And hopefully my explanation at the beginning of this paint style setups was useful to you all. Because no, it is not, 1 + 1 = 2 all the time, but there are certain characteristics that whenever something happens, you should be looking for this as the next piece or the next piece of the puzzle. So it's really just a matter of knowing what to look for and then having the patience to wait for it to actually happen and the confidence that when it does show up to take the trade, and also the confidence that it's not showing up to not take the trade. All right, I hope you all have enjoyed this. I will see you in the next one. I'm doing a 3 days of breakouts video for this week, and that should be coming out either Saturday or Sunday. Bye-bye.